Hi everyone, I'm David Oudsler and I'm the Victorian State Director for Commercial Property here at ANZ. And today we're here to discuss the ANZ Property Council of Australia's survey report, which was released last week. Today I'm joined by Joe Kougas of VIMG, a residential, commercial and mixed-use developer across the country, and also Daniel Gradwell, a senior economist with ANZ and a co-author of the report. Thanks for joining me today.
Sure, no problems.
Daniel, I might start with you. What key themes are you seeing that is presented out of this survey?
Yeah, sure. So probably the most interesting bit for us is this divergence that we're seeing between the residential sector and other commercial property segments. We've seen a pretty sharp collapse in confidence around the residential sector, and that's consistent with most of the data that you're probably familiar with in terms of falling prices, weaker clearance rates, and housing credits starting to dry up as well. But on the other hand, the good news from the survey is that confidence in the commercial property sector is sitting at very high levels, actually the highest since the survey started about 7 or 8 years ago. So that's pretty encouraging, and we're seeing some real strong growth there in sectors like industrial property and the tourism sector in particular.
Okay, that's interesting. I mean, clearly there's a lot of talk about residential in the marketplace. Joe, what are you seeing out there?
We're actually saying that there is less and less purchases on the market, especially investors who are willing to really dip their feet in the market. We're finding that there is a lot of owner-occupiers in the market, but there is this underlying questions whether they are going to get the funding. Consumer sentiment is really down at the moment though.
Yeah, look, I'd agree with that. I mean, I think certainly at ANZ we're still funding a lot of residential projects, but there's no doubt that the market has changed a little bit over the last sort of 12 months or so.
Yeah, and I think that's a good point, and that's something we talk about quite a bit in the sense that there's markets within markets. So even though we're seeing prices in places like Sydney and to a lesser extent Melbourne are dropping off at the moment, that's not consistent across all of Australia. Plenty of other capital cities and especially some of the regional areas are still performing very well at the moment.
Agreed, yeah.
And certainly here in Melbourne there's been a shift over the last 12 months or so away from that investor product to the owner-occupier stock, and that's still holding up quite well. To your point, Joe, I mean, it is still challenging to get some sales and it takes a little longer than perhaps it did a few years ago, but that market seems to still be there. Joe, so you mentioned before a little bit about the availability of credit in the marketplace, and that's both on the commercial side in terms of funding developers and also on the residential side for end purchasers. Have you noticed a change in sentiment there or a tightening of credit over, say, the last 6 to 12 months?
Oh, yes, without a doubt. We're actually seeing that a lot of purchasers are struggling to get finance, and we're finding a lot of purchasers are now going through to the third tier lenders. And they're offering interest rates anywhere between 6 and 7.5%. A lot of purchasers are actually saying, well, no, look, we're just not going to go forward with that.
And Daniel, the report touched on that as well.
Exactly, yeah. So it's not just your experience, Joe. This is consistent with everyone that we're seeing from the survey. So the major takeaway from this quarter's release is that those respondents overwhelmingly expect credit conditions to get tighter over the next 12 months. And actually their outlook for the next year is the weakest that it's ever been. If we're thinking about prices, most of the recent weakness in that story around Sydney and Melbourne we think is being driven by that tighter credit that's limiting how much people can borrow and whether they can actually get the funding at all, as you alluded to earlier. We know that building approvals have been sitting at very high levels over the last couple of years, but we don't think that's going to continue. Having said that though, there's still this pretty strong backlog of work already under construction, and that's going to keep your overall housing investment at pretty high levels for some time to come. But certainly we think we're around about the peak in that cycle at the moment.
Yeah, I tend to agree with that, especially since we've got some very strong, strong fundamentals in the economy. Unemployment's very low. We're getting a huge amount of immigration through as well. So I think these underlying factors are just going to keep on supporting through the housing economy.
Yep, I think that's right. And one of my fun facts at the moment is that Victoria's population growth last year was actually the strongest since the gold rush in the 1850s. So I think that puts into perspective just how strong that immigration, as you said, is.
All right, guys. Well, thanks so much for your time today. I think that was great. I really appreciate it.
Thank you very much.
Thanks, David. Thanks, Joe.